हाँ भाई. Good afternoon and heartily welcome to all the dignitaries, guests, delegates with great joy and immense exultation to this National Conference on Valuation, 5 years of journey and the way forward, organized by ICAI Registered Valuers Organization, IOV Registered Valuers Foundation, ICMAI Registered Valuers Organization, all the RVOs, and in association with the Insolvency and Bankruptcy Board of India. We are organizing this event today as the valuation profession got notified, or Section 247 of the Companies Act got notified on this day on 18th October 2017. So I feel privileged to extend my warm welcome to all present here for the celebration and commemoration of the Valuation Day 2022, wherein we are celebrating 5 years of journey of the regulation of valuation profession. Now I invite to today's function's chief guest or guest to come and occupy their distinguished chairs, sir. So we are honored to have with us today Honorable Justice Anil Dave, sir. Whole-time member Shri Sudhakar Shukla, sir. Shri Rajiv Kher, sir, Chairperson ICI Registered Valuers Organization. Shri Amit Pradhan, sir, ED Insolvency and Bankruptcy Board of India. Dr. Rakesh Sehgal, sir, MD ICI Registered Valuers Organization. And Shri Vinay Goyal, sir, MD IOV RVF. A very warm and hearty welcome to you, sirs. As I have already welcomed you all, with all of you, I would also like to welcome Shri Rajesh Gupta, sir, Shri Manish Kumar, sir, from IBBI, Shri Deepak Rao, sir, then Dr. S.K. Gupta, sir, Mukulita Vijayvargiya, ma'am, who is the former WTM from Insolvency and Bankruptcy Board of India, and to all of you. Today is a very special day. I have already mentioned that on this day, Section 247 of the Companies Act and Companies Registered Valuers and Valuation Rules 2017 were notified and enforced. And it's been a 5 years journey for the regulation of this profession. We are glad about your presence. Now, I would, on behalf of all the RVOs, I thank all of them for providing their gracious presence to join us today to enhance the importance of this day. Thank you very much, sirs. We would now request the dignitaries to please light the auspicious lamp to initiate the program, sir.
This is a shorter cut for us.
Thank you, sirs. Now we would request Shri Vinay Goyal, sir, MD and CEO IOV RVF, to please deliver welcome address.
Namaskar. It's my privilege to be here amongst such an august gathering. And I welcome Honorable Justice Shri Anil Daveji as our chief guest, Shri Sudhakar Shuklaji, WTM IBBI, our guest of honor, Dr. Mukulita Vijayvargiya, former WTM IBBI, Mr. Amit Pradhan, Executive Director, IBBI, Dr. S.K. Gupta, MD, ICMI RVO, Dr. Rakesh Sehgal, MD, ICI RVO, Shri Manish Chaudhary, Chief General Manager, IBBI, Mr. Rajesh Gupta, IBBI, Mr. Deepak Rao, IBBI, all panelists of the technical session, all IBBI officials present, MD and CEO the RVOs and IPs who are present here, registered valuers, registered valuer entities, and insolvency professionals. I welcome all to this National Conference on Valuation, 5 years of journey and the way forward. Let's take a pause today to introspect the journey of the company's registered valuers and valuation rules 2017, which were notified on this very day 5 years ago, that is 18th October 2017, and subsequently created this valuation ecosystem. Since then, the valuation profession is being regulated under the Companies Act 2013 and the IBC. This provides a solid foundation for creating a credible base of valuers for these two regulations. Valuers bound by the valuation rules and code of conduct are accountable for their actions and misconduct. The period of 5 years was full of challenges and opportunities for all the stakeholders like authority, RVOs, and registered valuers. This was due to the transformation of this profession and demand for the profession under IBC. The biggest of all challenges had been the imposition of regulatory framework and entry-level checkpoints. However, I believe that these challenges bring opportunities along, whereas the measures of success depends upon the resilience and the will to respond. Thereby, creation of this regulated valuation ecosystem is gaining preference amongst the few other institutions and authorities like SEBI, etc. Fact of the situation is that no one size fits all definition of a valuer under different Indian laws. For example, the Companies Act defining a valuer and his eligibility is quite different from Income Tax and Wealth Tax Act. Similar situation prevails under all other acts as well. Thus, valuers operating under other legislations are not bound by any regulatory framework. Therefore, they are not accountable for their any conduct. However, regulatory framework under the Companies Act and IBC has already laid the foundation to institutionalize the profession of valuers. The concept of this three-tier regulation where RVOs are frontline regulators governed by IBBI, being the authority only as per the rules notified by Ministry of Corporate Affairs, requires further deliberations for more effectiveness in this ecosystem. This day may see how this ecosystem comprehends the mantra that is Sabka Saath, Sabka Vikas or Sabka Vishwas, given by our beloved Prime Minister Mr. Narendra Modi, and paving the way towards Atmanirbhar Bharat and guiding the agenda for way forward. Thank you, gentlemen. Thank you all.
Thank you, sir. Now I would request Dr. Rakesh Sehgal, sir, MD ICI RVO, to please address on this important occasion. He will also brief about the program.
Thank you, Sarika ji. Let me start by welcoming the dignitaries on the dais, my former chairman in ICI RVO, Justice Dave Saab, the current chairman Rajiv Kherji, Amit Pradhan ji, and Shukla ji from IBBI, and fellow colleague from IUVF RVF, Mr. Goel. Now, it's a very important occasion. Why it is important, we need to understand the entire ecosystem which has been created. Our constitution talks at great length about the freedom to operate. Now, types of freedom, Companies Act deal with the operation of companies, the Antitrust, the Competition Act, that the entry barriers and other barriers are addressed, and the IBC code is the latest entrant, the freedom to exit. Now, all these three put together, where are we leading to? This notification of 2017, wherein 247 made it mandatory that in respects of stock, share, debenture, goodwill, net worth or liabilities, the valuation is to be done by a registered valuer. And the valuation rules, I will call it in short as the valuation rules, the registered valuer and valuation rules, they have provided a framework of development and regulation. What are the entry requirements? What are the licensing requirements? To what kind of disciplinary mechanism they are exposed to? And the ecosystem is that they all get integrated. So IBC in its preamble, it is talking about a public interest standard. Now it talks about so many things, but I have picked up a few. So it says that maximization of the value of assets, promoting entrepreneurship, and balancing the interests of all stakeholders. Now put together how this is addressed. We, under the rules, created a profession. So this is for the first time that profession of IP and RVs was created. And it's a landmark thing. Not that valuation never existed in India. It was always there. So many enactments, as my colleague Goel Saab talked about, they are not covered, they are not under the ambit of regulation and possibly not even self-regulation. We need to see how that entire ecosystem has to migrate. Now, in terms of these valuation rules, whether it is an individual entity or a juridical person, how they operate. So we have laid down certain performance standards, the legal standards, diligence and duty to take care, legal terminologies. Then it also talks about a fit and proper person. Now, what is a fit and proper person? Not defined, but legally, yes, interpretable. And that is how these frontline regulators, the RVOs, are supposed to perform. Now, why this all was needed? Possibly in a laissez-faire economy, it is going to happen. In brick and mortar economy, it also used to operate, that some businesses are going to fail, whether it is the cause of financial duress, the operational leverage is not there, or it is an economic duress. Apart from this, you have some fundamental problems that businesses are going to fail. Now that would need restructuring or rehabilitation. And how do you do that? Because if the restructuring or rehabilitation has to be done, then you are trying to find out whether the entity is viable or not. So in statistics, we have the type 1 and type 2 errors. So that is the same situation here. So the professional, what he would do is, he would determine a value, come out with some solutions, and we'll see that the liquidation of a viable company is not done. And at the same time, we do not rescue an unviable company. So the rules in itself, they have provided for how the valuation is to be done. Of course, the rules are there. So one may say, judicially, one may say that, then what is the problem? Why interpretations are different? Why methodologies are different? But the rules in itself, they lay down that it is to be done with reference to a particular standard, and then certain caveat limitations, background value of the asset, and procedure and methodology. So all that is important. Now, why I set up this entire context? To explain that within the ecosystem itself, there are certain challenges, but then those challenges would depend upon and the settlement by the registered valuer or the entity, how the interpretation is to be done, that the public interest standard which the IBC code has set out, that is achieved. So whether we are trying to determine the fair value, liquidation value, resolution value, or enterprise value, so all that is something which is to be done by the valuation experts, and the ecosystem is there. So I think in this session today, the two sessions that follow, we are talking about the 5 years journey. So the respective RVs and IPs, they will address what all challenges they faced. And the second, the session is especially on the way forward. So I think we have a great day ahead. And this is the first time. I must thank IBBI for supporting all the RVs and IP entities, and of course the RVOs and the insolvency institutions, that they could come out with this kind of a program. We do the brainstorming and do something which is more meaningful and relevant for the profession at large. Thank you so much.
Thank you, sir. We have the pleasure now in inviting Shri Rajiv Kher, sir, Chairperson ICI RVO and former Secretary Ministry of Commerce, to deliver his address. Welcome to you, sir.
Thank you, Sarika. Honorable Justice Dave, distinguished gentlemen on the dais, ladies and gentlemen. It's indeed a pleasure for me, a privilege for me for being part of this conference today. My association with the profession is very limited and very new. Well, I come from a background of civil service and spent a long time in the Ministry of Commerce, about 10 years, doing trade and commerce. And it is in that context that one got familiarized with whatever we might be discussing today. So I'm indeed privileged to be here to primarily get a slightly deeper dive into what is something which has been coming to me more peripherally so far. This is an area which is, at least in 2016 when the IBBI came into existence, we were very enthused with the whole idea of insolvency resolutions, speeding up the process of uh, corporate settlements, and it was only a God-sent opportunity for me to look at it with a little more closeness. The whole objective of carrying out the requisite amendments in the law, in the Companies Act and the corresponding rules was to establish, promote and maintain high ethical and professional standards of practice and professional conduct of registered valuers in today's context. I am not referring to the entire gamut of insolvency resolution alone. IBBI performs the delegated function of the government, and it has the statutory mandate under the law to carry out the government's responsibility for insolvency resolution. Now, RVOs are extremely important link in this whole process, because a large part of the insolvency resolution would depend on the edifice of valuation. And therefore, I think RVOs do a very important and an extremely sensitive job. The rigors of qualifying to be a registered valuer and responding to the demands of sound standards and ethics also opens up newer opportunities for professionals in various functions, not just the accountancy function. And therefore, I think we are looking at, and which was one of the intention of the mandate, looking at a much larger spectrum of professional competence, skills, and a framework of ethics and integrity. So this is the big challenge for, as we talk on the completion of 5th year of this extremely important milestone in our corporate mechanism. This is perhaps the most important challenge as to how these institutions discharge this responsibility assigned to them. In this context, I think one aspect which is extremely important, and with a limited perspective that I have, is the question of standards. And I think the big challenge, because the multiplicity of institutions involved in the process of valuation and the multiple numbers of people involved in this process, the diversity of situations which evolve from sector to sector in the area of insolvency resolution, I think throws up a big challenge of trying to be as consistent as possible and as uniform in application of various valuation practices. And therefore, I think standards become the core of, common and unified standard become the core of how the valuers, how the professionals address some of these challenges. Perhaps IBBI would address these issues in the short future, near future. Now, RVOs are assigned with the duty of developing the profession of registered valuers in line with the international requirements. One of the most important requirements now on regulators is to bring valuation standards, of which I have already spoken. Last 5 years were notable years for many reasons, as ICAI RVO has till date, and I am referring to specifically the ICAI RVO, has till date published several technical guidance, frequently asked questions, educational material, professional insights and concept papers on valuation, and proposes to do much more than that. I think the crucial challenge, as I conclude, for all of us is to see how the valuers profession remains vigilant and own up their responsibility by giving clear and categoric values and by galvanizing the entire ecosystem of IBC and valuation in a manner which becomes dependable, conscious of the integrity involved in the process, and which facilitates the whole process of insolvency resolution. The need to follow the laws, regulations, amendments, and comply with the code of conduct, and also to keep up the spirit of law. I think on this occasion, because we are also celebrating, in a sense, a birth anniversary of the profession, I must compliment all those who have been associated with this profession, and would like to convey to them my best wishes, and also urge them to recognize the underlying substance of the profession, that is integrity and ethics. Thank you so much.
Thank you, sir, for throwing light on the duties and responsibilities of RVOs and RVs specifically. Now we have the privilege to invite our guest of honor, Shri Sudhakar Shukla sir, WTM IBBI, to deliver his address and guide the professionals. Sir, just one thing, this program is actually telecasted live. So I just forgot to mention it.
Honorable Justice Dave and other dignitaries on the dais, and I can see equally important people are sitting other side of the table to celebrate the Valuation Day. I thought I have been with IBBI since last 3 years, but it is the first time I'm seeing such a gathering in a program which is conducted by RBOs. So it is my compliment to organizers and all the RBOs who have come together to put up this great show. Basically, on valuation, something has been said in the opening remarks. As a profession, why it came into being, fit and proper issues. I thought I would be digressing a bit, trying to take you through the way forward as well, because that is the title. And as a regulator, we have to be agile to the growing needs and see that professionals do what they are supposed to do. My intervention, short intervention, is subdivided into 4 parts basically. One is general observations, how it looks like when you talk about valuation. Then I tried to highlight that how valuation related requirements have been mentioned in the statute and they are growing over a period of time. So it is not a stagnant water at all. And then I will briefly touch about the challenges and the way forward. Challenges, again, I am not throwing open the methodology part of it, basically subjective nature of the subject itself, but more on the theoretical grounds that why valuation is perceived to be a challenging task, just to remind that we are in the profession which is full of roadblocks and we are overcoming those roadblocks to come out as a winner. So as a first part, I just wanted to say that whenever I say and if anybody asks what is the achievement under the code, and first parameter which comes into mind to say the success story of IBC is the realization in the context of valuation, LV, liquidation value. 2,30,000 crores over realization, and when we compare with liquidation value, it is 178%, which is not a mean achievement, despite distractors are saying that journey is downhill. So 178% of liquidation value, we always say that has not been achieved in any standard set to deal with the insolvency space. So basically, we have to be diligent all the time. And Graham Benjamin says that it is not that what investment has been put into the particular venture in erecting those edifices, but it is more important to see the delivery during the process and the end results when company wind up, what value it leaves to the society and the workmen and economic parameters at a large extent. So basically, and same quotations you can see from Confucius, that ancient time philosopher, basically that expectation in life depend on diligence. The professional that would like to be perfect, his work must first sharpen his skills and continuously strive to do so. And Sehgal Saab was pointing to this, that we are coming out, and even Kher Saab has pointed out that so many documents are coming from the frontline regulators, RVOs, on sharpening the skill part of it. Basically, life is changing very fast. So we have to be very agile to the fact that we are living in a dynamic world. IBBI on its part all the time works towards this direction. We also have multiple courses run or advocacy programs run to educate all the stakeholders, including RBOs. So that is our job that we will continue to do. We also did very hard work actually to propagate that, though it is mentioned that your valuation has been recognized in a particular day. So these are registered valuers we are talking today. And we were taking up with the regulators and ministries all the time to give more preference to the registered valuers who are the regulated entities than anybody else in the market. Many have heard us. SEBI has heard us. Deepam has heard us. And the good news is, and this is the day when we can share the good news as well, that on 25th September, on the 26th meeting of the FSDC chaired by FM, it has been decided that all regulators shall use the services of the registered valuers. So the word used is shall, and another word in the same minutes is that other ministries may also try to work with registered valuers. So there is a challenges in the part of the ministries, so that we will work out. We will also work out, because this is the announcement only made in the FSDC meeting where all regulators were present. We have to do a rigorous follow-up so that this happens and happens very fast. And Pradhan Sahab ji has noted down, I believe, and he's following up already on this, basically, that this is an important milestone decision and we cannot let it go like this. So we have to be sitting with the regulators across the stream to see that this is worked out. On the basically this provisions related to regulation, you all know better than I do, but some provisions are very clear that in CRP it is regulation 27 which requires 2 valuers to come in. In liquidation, under liquidation 35 regulation, it again says that when liquidator feels that the numbers he has is not the representative of the market, then it can again go for the valuation again. For personal guarantors, again provision is there that whenever he files an application, that has to be accompanied with the report of the valuer along with this filing by the personal guarantors. More importantly, on avoidance transaction, section 46(2) of the code itself says that valuation, if this kind of discrepancy is noticed, then valuation has to be ordered in such cases. On voluntary liquidation, again, under section 59(3), while filing this application, valuation report is to be part of the submissions made by the by the corporate person or person, as the case may be. But recently we have gone beyond this, and if you see the reforms unfolding since July onwards, one important change we have done, that we have made it clear to the COC members that because all the banks carry out the valuations for the CD which are under trouble. So we have asked them that these valuation reports which were not being submitted so far under the statute, to submit those reports to the RP to be shared with you all, so that you know that this is the background from where this CD has started the downhill journey. You know the classification of assets, you know the assets, and you try to build upon the case from those documents. This was a very simple requirement, but somehow it was not there in the statute. Now it is part of the statute. COC members have to share it with RP and RP with you. Second change we have done to define the role of valuation further, that we have gone ahead to say that RP, like RPs and IRPs, need to be incentivized in their payments. And this again we are saying that in cases where the outcome of CRP process is over and above liquidation value, then only RP has to be incentivized as per the dispensation given as per the call of the COC. So valuation has been, as a benchmark, it has to be used. We have gone ahead, and you are listening the debate, that we are saying that we should also try to be independent, financially independent. All the regulators, most of the regulators are financially independent, and we are dependent on the grant of the government. And to be fair enough, government has never choked us on any count of financial requirement. Whatever we wanted, post we wanted, money we wanted, grant we wanted, we have got each and every penny and more than that. But still we thought we have to be independent financially. And for this, one of the measure which we have proposed, and it has been approved already, regulation is out, that 0.25% of the realizable value would be coming to IBBI. But it would be coming only in the cases where, again, the outcome is more than the liquidation value. So for us to become financially independent, liquidation value has become very important parameter to work with. So these are the few changes happened in September, which I thought I would be listing. On the challenges part, briefly, these are known to you, but what we have as on theoretical plane, we always talk about water diamond paradox, actually a difference between the value and the pricing. It would be not, I'm we taking liberty to explain to such a learned group about the difference between the price and the value. But this debate is going on since ages. Despite water being valuable, it is priced little due to demand is not scarce, abundance of water, maybe later life cycle or maybe next round when water itself becomes very limited, then this whole paradox would be upside down, because water is very essential for the. Second issue is basically we are dealing with economic law, and this is the Oliver Hart's proposition, Nobel laureate. He got the Nobel Prize on this. Basically, economic law is dealing with incomplete contract. And it is very important for valuation part, basically how you would be evaluating if this whole contract on the basis of which edifice has been erected is incomplete. Then we also have seen in the text that there is a iceberg challenge. I mentioned about the 46, section 46(2). What we see above the water is just a tip. Large part lies beneath the water, which one has to uncover, trace it out. So it would be difficult for a normal valuation report to go into what is available below water, but it is always better, I thought, that if you are getting some hints about the assets which are undercover, you can provide a hint in the report. There is a mechanism for auditing those aspects, that is a different aspect. Then we have similar concept of melting ice syndrome. It's an ice cream which is in your hand, which you are trying to evaluate. Every time it is dripping, and by the end it comes, you have only stick with you, no value. And there are so many cases where valuation report says there is no realizable value in the asset. So that is part of This again, oozing from these facts, there are so many AA orders which are saying that basically one criticism is coming basically about the secrecy being not maintained. So secrecy is not maintained means report is being shared, videocon case is live, your reports are shared. I don't know whom, we cannot say whom, because it's RP who knows, you who know. So this is a report. Valuation quality has been in question. So that again is these are AA orders. So we are not saying that this is not happening. It's quality of a evaluation is very much commented by AA. So whatever lessons, even one of the DC hearings, I'm also, after ma'am left, I'm heading the DC hearings. I don't want to share the outcomes there, but still I'm saying the message is clear. In one of the DC hearings, I came to know that RP was arm twisting the valuer to give a particular report. How can anybody allow this? You are professionals. You have perfected the art of valuation. RP has not. How can RP arm twist to give a certain kind of? So whatever case come to our light, we try to correct it. But like in general, I thought you have to resist that somebody is arm twisting you. You can report to IBBI anytime that such occurrence has happened, and people are saying we will stop the fee, etc., because you are not writing the report as I like. This is not acceptable to us. On standards, things have been said. Debate currently is on that standards which we are framing under Companies Act may take time. So we are trying to get some messages, some report prepared under the IBC itself, which could be implemented fast. So that is very much under the discussion, and you will be listening a lot about this, and many of the your RVOs have helped us in preparing the first draft on valuation standards to be adopted under IBC. So that is our wish list. And second wish list where I want to end is Sahu Committee report. We are pursuing, because that is the crux in driving this profession on scientific lines. So that report you all have read, commented. So I will just say that IBBI, whatever we can do in each and every forum, we are raising that this report has to be implemented. We need to develop this profession on scientific lines, and maybe separate regulator can do better than IBBI. So because then you are across the spectrum, you can see and try to resolve the issues which are cross-cutting. So with these words, I thank you very much. I thought I exceeded, but this is the spur of the moment when you cannot stop yourself. Thank you very much.
Thank you, sir, for enlightening us on this 5 years journey and briefing about the challenges and expectations of the stakeholders. Now we would request Amit Pradhan, sir, Executive Director, IBBI, to deliver his address, please.
Honorable Justice Shri Dabe, full-time member IBBI Shri Shukla ji, former full-time member Mukulita Vijayvarga ji, Chairperson of ICI RBO Shri Rajiv Kher, MD of IOB RBF Shri Goyal ji, MD of ICI RBO Dr. Saigal ji, and my colleagues of IBBI and the esteemed valuers who are present here, and also the valuers who have joined online. I have been told like this is a hybrid program being conducted by the RBOs. To begin with, I would like to just say to my senior who just delivered his address, sorry sir for any repetition if I made, but I have to follow that uniformity principle which we expect from the registered valuers also, because regulator cannot speak in two ways. So definitely there will be some repetition, and if anything I exceed my brief, that may be treated as void of initio. So that with that disclaimer, I am proceeding. So to begin with, I congratulate on the Valuation Day being celebrated by the registered valuer organization, especially the three RBOs who have come together to organize this Valuation Day: the IOB Registered Valuer Foundation, ICMI, and ICI Registered Valuer Organization. And I may just share that why we could conceptualize this Valuation Day. I think I may just share this. Some secret is there. So we were having a regular follow-up meeting, like every regulator will be doing it with regulated entities. So there, this news was broke like that. These rules were notified on this day. And this was very recently in the last month's follow-up meeting. And suddenly this idea clicked to somebody. I don't want to take this to my own thing. So why not we celebrate this day as a Valuation Day? I think that it is really commendable that all RBOs have come together to celebrate this occasion. And on this occasion, the news which has been broke by our whole-time member, that FSDC has recommended the regulators to use the registered valuers by IBBI. I think it is a very good gift to you on the this birthday. I would say it's a kind of birthday gift. I think you should all celebrate this news with full heart. So, but if some more responsibility comes, if more opportunity comes, that comes with the responsibilities. I'm sure when new opportunities will be open to you, you will be subjected to many more regulations, not only on IBBI side, but definitely the other regulators which you will be working with, they will also be imposing some terms, some conditions, some regulations. So you have to be very conscious about that fact also. So this regulation, I want to speak about something about regulation. What is this regulation? So regulation essentially consists of giving license to an entity. License means the kind of registration or the recognition, and there are some norms for entry. Entry in the sense, no undesirable person should not be allowed in a regulated market. Then comes the power for a regulator to make regulations. What for regulations are made? Regulations are made for monitoring day-to-day performance and performance of the regulated entities. And these regulations are also used to develop a market. If regulations are only for disciplining regulated entities, it will not work. So development is equally important. Then another role which comes to the regulator is review and assessment. That is a day-to-day monitoring. And now I come to that the side of the disciplinary side. Like once that inspection is also a routine activity of the regulator. During inspection, a regulator comes to know many shortcomings, and there are opportunities for the regulator to improve the functioning of a regulated entity. So if certain limits are crossed, then regulator is bound to take some corrective actions. And what those corrective actions may be, to start with, it can be an administrative sanction. That may not hurt your business, but there is a line to it, and that is If that line is crossed, then comes the enforcement action. That also include sanction, monetary sanctions, as well as the civil sanction of civil nature, like debarment, suspension, or the cancellation. And the last thing which comes, if the orders being passed by the regulator are not being complied with, those order, if enforcement or implementation powers are not there in the regulatory powers or empowerment, so all these actions will die, will be of no use. So that enforcement and execution is very important. So that way, IBBI, we call it as a unique regulator. This performs all the three functions, necessary functions, it enacts its regulations. So we can call it a quasi-judicial functions it performs, and by way of regulation making, it performs executive functions, the way we regulate day-to-day activities of the regulated entities, and also enforcement and execution also. I would say on execution side, there are certain powers which are lacking to us. I'm sure that soon that will also be coming to us. And this regulation benefits, who is benefited by the regulation? I would say everybody who is of that market. In case of, I will take that example of valuation side also. I would say the valuers are benefited. Why? If you are well regulated, you will get more and more business. You just heard a whole-time member saying that because you are a registered valuer by IBBI and a regulator under the statute, you will get more and more opportunity to work with in other sectors of the market. So the benefit which accrues to the regulated entities cannot be less than the benefit which is passed on to the consumers. Consumers are equally benefited. So regulations are very important. So please observe any sort of regulation very meticulously, and any stringent provisions are there. I think they are for your benefit only. It may initially be a pain, but it will be a gain soon. So just on the IBC side, Sir has just covered all the benefits or all the remarkable work which Valuation has done to the IBC system. Sir, I would like to add just few things, sir. Few more things in addition to what you have said, sir. Maybe something may be repetition also, sir. Till September 2022, more than 5,800 cases have been admitted to CRP cases, out of which 3,900 cases have been completed. Around 1,900 cases are in the pipeline, which are under process. It is noteworthy to mention that every CRP and even the liquidation process require appointment of minimum 2 valuers. Maybe in some time it may be a 3 valuers also, in case of substantial difference between 2 valuers. So it can be said that the registered valuers have contributed to more than 10,000 valuation reports during the process under the code. So this is a remarkable, I think, achievement in the last 5 years. 10,000 cases you have assessed as a valuer. Lastly, as a regulator, since we are within the room, I think we want to share some constraint as a regulator. You know that IBBI is a delegated, we are working under the delegated capacity. So it is a rules which gives us power to regulate the valuation profession. And what we have observed, because under the IBC side, as a regulator, we are able to frame regulations overnight. If any situation demands, that we do. But that constraint is there in the case of valuation. We are not able to frame regulations. We come across with several deficiencies, which requires rectification. Sometimes we feel constraints. We don't have power to impose monetary sanctions. So sometimes we feel constrained because this is not in benefit of either side, even the valuer side also, regulator side. Because if we have to proceed with a show cause notice against a valuer, we have to necessarily either suspend or cancel your registration. Because all violation cannot be major one. So sometimes it may be a minor violation. So that may be better dealt under a monetary sanction in that regime. So that type of constraints we are feeling, but despite that constraints, the achievement which we have observed in the last 5 years, I think that is tremendous. And with this, I want to close. Thank you very much, and please celebrate this occasion, not only today, even the entire year. Thank you.
Thank you, sir, for briefing about responsibilities with opportunities, special focus on the requirement for monitoring and compliance, and the regulation making. Now we request our chief guest of the day. I am honored to invite Justice Dave, sir. Welcome to you, sir.
Dignitaries on the dais and off the dais, very valuable valuers, ladies and gentlemen. Honestly speaking, I have become a little conscious. When I was given invitation for coming here, Sarika ji told me that Daveji, be careful. You are going to be evaluated by very, very competent valuers. So I'm really puzzled as to what to say, because all important things have been said by all dignitaries. Now, virtually nothing has been left for me. But when I have come here and when a cup of tea is going to be offered to me, quid pro quo, I have to speak something. See, otherwise there will be a problem, because she would not offer me even cup of tea. I know she's a chartered accountant, and we chartered accountants are very money-minded. You know it well. Anyway, when she told me that I am likely to be valued, then I was happy that there would not be any price of myself. So there is very important thing for human beings, that we are valuable. You cannot be termed in price. And those who are dishonest, those whose integrity is doubtful, or those who don't have integrity, their price is determined. So whatever value you give me, I am happy with that. So far as I don't get price, there is no problem. Nowadays, really, what is really important is this ethics valuation, and in valuation and ethics for valuers. Lot many things were said with regard to regulation. Of course, with regard to regulation, one can say that if you want to have any competent body, then you have to see that the best person comes, he is given best training, and ultimately, finally, it is seen that the outcome, final outcome, the person has been groomed properly for anything. Say if you want to make this table or chair. Now, a good carpenter would always select good wood. Say if the wood is good, then definitely the furniture is going to be quite good. Good workmanship. There's a good training. At that time, a person must be groomed properly. And third, finally, quality control. You have to see, barabar hai na polish? Nahi, yahan barabar nahi hai. That these three things are to be done by any regulatory body. And if you are successful in these three things, the final outcome the regulator would bring would be definitely excellent. Only one thing would be missing here. That is with regard to honesty and integrity in ethics. Somehow I always feel that it is very difficult to teach ethics to anybody. I think reason is very simple. We have got conscience. When we are born, the Almighty gives you very clean, very beautiful, very nice conscience. Then it is for us to make it blunt or to sharpen it. You can't teach me, or you can't teach anybody at this age, चोरी मत करना, हाँ, dishonesty मत करना, तुझे पैसे ज़्यादा मिले तो भी valuation इतना मत करना. Now you see, as a matter of fact, we know it very well. Our conscience and our Almighty would definitely tell us that this you cannot do. And if you do it, you are doing against the will of the Almighty and against your conscience. So if right from beginning, you feel that your level of ethics is high, your conscience cannot be cheated, cannot be made blunt, then I think all these regulations are useless. You see, this is the greatest regulator so far as your integrity and honesty is concerned. And for valuers, honesty, integrity, character is really very important. by your wrong valuation, some company would be going to liquidation, the assets would be sold, would be scrapped, and number of laborers would become unemployed. There might be deposits of number of persons. I remember, I am from Gujarat, Ahmedabad. In our textile mills, they used to take deposits. Several widows and those who were having a limited amount, they used to put the money in fixed deposit. They used to get 7, 8, 10% interest. And on that interest, they were maintaining the family. Now, if that limited company is wound up, think about that poor widow. What would she get? Think about that poor man who was having only one-time savings, and from the income thereof, he is maintaining himself. Think about that laborer, the only breadwinner of the family, and his job will be lost because the company has gone into liquidation. Though the company was viable, it was possible to survive to keep the company alive and do the business, but only because of some wrong valuation done by somebody, a dishonest person, something is happening. So we all, I would also consider myself to be a valuer right now because I am among you. Of course, as a chartered accountant, my role was very limited. Valuation में कुछ 5-10 mark का कुछ question आता होगा, I do not remember, but I know only written down value and standard depreciation and market value and other values, otherwise not much. But you are all experts and you are quite learned. I say one more thing. I'm told that the conference is to be arranged and some teaching would be there or discussion would be there. You see, in any field nowadays, in any profession, you have not only to learn, you have to unlearn and relearn also. That's very important because once you learn something, you know the say, when I became chartered accountant in 1975, I must have learned some principles with regard to accounts, something with regard to income tax. So my impression is 75 or 71 when I did my BCom and 75 when I became chartered accountant, income tax was payable at the income of 15,000. Suppose somebody asked me, Anil, my income 20,000 hai, should I pay tax? I said, yes. 15,000 is the tax. You will have to pay tax. Now you see, I have to unlearn that. You see, now I am in 2022, Income Tax Act has been amended. So first of all, you learn something. When I was in classroom, my professor used to say, he was a chartered accountant, okay, this is if you have got one child, your income. I said, abhi child ki baat bhi aayi nahi. You see, nobody knows that if you have a child, you will get some exemption, your income limit would be a little more. That was in those days. So then you have to unlearn that whatever I had learned in my college, that I have to unlearn, I have to forget it. No, that is not good today. But only unlearning is not sufficient. I have to relearn. Now I should say 1,50,000 aisa kuch jo bhi hoga wo. I should remember that thing also. I have to relearn also. And that is the work to be done by all these bodies, all the regulators, so that we all remain up to date. Our knowledge is up to date because we have to forget old things. We have to know new things. Whatever development is there, we should be aware about the development. And if you are not aware about the development, then you are a useless fellow. You are a dead person. If you don't learn anything new, and especially in a profession, say medical profession or engineering profession or my legal profession, say if I know law of 1947 and if today somebody puts a question to me, and if I look at the book of 1947, the client would be doomed and even I would be doomed. He will beat me. कि क्या कानून बताया तुमने? What have you done, sir? Sir भी नहीं कहेगा वो गाली देके मारेगा मुझे because that is not the law prevailing as on today. So these are very important things, and I am very sure these bodies which are there, which are regulating, they will be doing this important job, learning, relearning, unlearning and relearning. So that will keep us in market. We will be knowing everything in the field. So these are all important things, and most important is, I think, ethics in this profession, because if the valuation is incorrect, you can ruin somebody at the cost of somebody will be gaining, and that is also cheating, that you are not only cheating one person, but you are cheating number of persons. As I told you, that number of persons will become without jobs, somebody would be losing money, poor shareholders would hardly see color of their money, hard-earned money is saved by purchasing shares because somebody would feel that, okay, let me invest somewhere, I'll be getting some income. I can't do business. I'm a small person earning say 50,000 rupees, but I can save money and I can give it to an industry by purchase of shares of Trisco or any other company. So I am also investing that money, and my money is also go. I do not know what is the position of my funds. I don't know how to read the balance sheet. And you are the persons who will be valuing the property in case of difficulties. And I am very sure that you will be doing that job wonderfully. I wish you all the best. And today is a happy birthday, so I wish happy birthday to everybody. And I pray the Almighty that the body and all those persons who are living with the body, they prosper and they do wonderful. Thank you very much. Jai Hind.
Thank you, sir, for emphasizing on how important ethics are and how we should follow the same to meet expectations of the stakeholders, and what we should do to unlearn and then relearn, how important this aspect also is. Now I would request for release of the publications by all the dignitaries on the dais. Firstly, we have the publications to be released by the ICI Registered Valuers Organization. First publication is the Journal of ICI RVO. We are issuing for the first time the valuation perspective. Yeah. Cheers. Next book is, as we are dealing with or discussing about the roles and responsibilities of the registered valuers, Handbook on Best Practices for Registered Valuers. Now we have the third book as Calendar of Trigger Dates on Valuation under Various Statutes. Next, we will have judicial pronouncements in valuation based on the judgments issued by various high courts, Supreme Court, appellate authorities, and others. This book was already hosted on the website, and other books have already been hosted on the website. But this is the platform where we wanted to tell our valuers that these books are available in the market. Now I would request for another issuance of yes, sir.
Especially
Yes, sir.
Sorry. Photographs are more important.
Books are also being released by IOV RVF. The first book that which they are issuing now is International Marketing. Next is Cargo Insurance. I think the dignitaries have already released Import Management. I would request for International Marketing publication to be released. Next, we have Valuation Precedents under IBC. Next publication is Valuation under Indian Statutes. We now have the time for release of publications by ICMI Registered Valuers Organization. First book is MCQ book on valuation. Next, we have a workbook on valuation.
This must be.
Next, we have Research Journal by ICMI RVO, and this is the last publication of the day. Thank you, sirs. We have today released 12 publications on valuation, and there are many more publications which we have kept outside so that the valuers can see what all we have released as on date. So, yes, sir. Now, I would request Shri Vinay Goyal, sir, to present a plant sapling as well as honor Justice Dave, sir, with a shawl.
के सरस्वती की मैं यहाँ तो प्रसाद के लिए किताब ही होनी चाहिए. These are all professionals leadership. No, मां सरस्वती. तो इससे ज्यादा की जरूरत नहीं.
I would now request Dr. S.K. Gupta, sir, to present a plant sapling as well as a shawl to Sudhakar Shukla, sir. I would request Dr. Rakesh Sehgal, sir, I would request Dr. Rakesh Sehgal, sir, to present a plant sapling and a shawl to Amit Pradhan, sir. I would now request Umesh Kandare, sir, to present a plant sapling as well as shawl to Shri Rajiv Kher, sir. Sir, all RVOs together, so. I would now request my colleague, Ms. S. Rita, to present a plant sapling, although it could have been done later, but since Mukulita ma'am is available as of now, So to present a shawl to her now. Mukulita ma'am. Thank you everyone. Thank you all the guests on dais, and you accepted our invitation, sir, with no time. When I called you, you just asked, told me, yes, I am available in Delhi, so I will definitely come. We are thankful on behalf of all the RVOs to be present here. We would now break for a quick break, tea break, and we'll reassemble in next 10 minutes only. Yeah. Thank you so much, sir. who's former WTM IBBI, CA Rajan Vadhavan, RBICA RVO, TV Balasubramanian, Registered Valuer, Shri Anil Kumar Sharma, Registered Valuer Plant and Machinery, Shri Sunil Agarwal, Registered Valuer Land and Building. The session would be chaired by Dr. Mukulita Vijayvargiya Madam, and the panel discussion will be moderated by CA Rajan Vadhavan Sir. The panel discussion is on 5 years of journey, challenges and way forward. We would welcome the panelists on the dais now. We hand over the session now to Dr. Mukulita Vijayvargiya Madam as well as CA Rajan Vadhavan Sir, so that they can take forward the panel discussion.
And the barriers also. The first national conference, as far as the assessment of the 5 years journey is concerned. I think especially Dr. S.K. Gupta, who asked me to come over here and gave me an opportunity to listen your views on the views of the all guests, honorable guests of the inaugural session. I'm delighted and I thank you. Today we have the panelists, Mr. Valuation, Subramanian Balasubramanianji, Sharmaji, Sunil Agarwalji. I think they will throw light on various facets of the valuation. As far as valuation is concerned, I'm very happy that in a country where we have rule of law, without standards, rule of law is not possible. We have to have standards and benchmark. And after 74, I think, 1980, after 7 years of independence, we could have valuation standards. It was long due. However, after the enactment of the Insolvency Bankruptcy Code, it was realized that this is necessary. And to have uniformity, we need to have standards. To have a rule of law also, I said, we need standards. And the standards along with without best practices, because standards alone will not work. Best practices are required, and I'm very happy that there were 10 publications. A good amount of literature is now available in the market for the valuers to have good valuation reports. Indian society, no doubt, values everything, including scrap. जो हम रत्ती बेचते हैं वहाँ valuation कर देते हैं. Whatever we do, maybe visible, invisible, property of any kind, maybe a goodwill also that is being valued. गीता के अनुसार हम देखें पाएंगे कि शरीफ कौन होता है, उसके भी गुण धर्म क्या होते हैं, बदमाश कौन होता है, उसके भी होते हैं, पंडित जन योगी जन क्या होते हैं, उसके भी गुण धर्म क्या होते हैं. And that has been well defined even in Gita also. So हम वैल्यू किसी व्यक्ति की भी करते हैं, मॉरल से भी करते हैं कि ये मॉरल ठीक है या नहीं. Today in this very session, I think it's a time to introspect, to assess whether the valuation standards laid down, whether the practices evolved by our own valuers in the Indian context and as well as the international context are valid enough, or they further require some improvement, or whether bad practices malpractices. What are the malpractices and which of the malpractices are removed in what way? I think that is another time, as highlighted by one of the guests in our session, that the valuer was pressurized. I think profession is independent. And if he is a professional I think we can overcome all those pressures and get give the valuation report independently so that we can achieve the objects of the insurance. And then I would like to see that. Doctors prescription without diagnosis not possible. Similarly, resolution given by any resolution applicant or the professional carrying out that CIP process, that is not possible without evaluation. So it is very important, or I should say that without valuation report, this process is not possible, hence values are important in the whole ecosystem, and that has been echoed across the world. So with these words, now I open for this session for questions and answers to be given by the panelists. Now I ask the panelists to start different themes of questions, which may be issues, not questions, issues, which are required to be discussed in this very session. And first is the various reports are at the variance of the board regulators. So how to overcome that? Because if there is a variance, there is a third valuer to be appointed. Actually, two valuers for each maybe planet or maybe as well as the time which is I think which is the benchmark for the whole process that also gets affected. So now I will request the other panelists to throw some light on this issue.
Thank you. Good evening, everyone. It's actually a privilege to be here. The entire valuation, as we are calling it, a valuer's birthday or whatever, the process started somewhere in early 2000s. I think it was a very momentous decision then thereafter. You know, the concept of registered valuer was brought into the Companies Act, but IBBI kind of gave birth or recognition to what is a registered valuer, what the expectations from a registered valuer are in terms of compliance with the ethics. And it's like it's the bedrock, right? Because it sets the threshold on the basis of which rehabilitation or insolvency or what is going to happen to a corporate debtor. And it's very important in that context, or how the valuation is carried out. Is it fair? Is it impartial? It can impact, as our predecessors over here, they spoke about, it can impact, it can have a huge impact on society. There's a tremendous influence, or the implication of valuation is very significant. So let me open up this panel discussion by first, like Mukundata ji said, to ask the panelists over here, the first question which always comes up is, how can you have two different values for the same asset and basing it on the same information and which are at a significant variance to each other? Let me address this first to Baluji and then Anil and then Sunil over here.
Yeah, so one of the key challenges which valuation faces is, especially under IBC, is the requirement to get two valuers report, and there are variances in that. The key contributors could be that there is some asymmetry in the way the information is being considered by the different parties. In fact, one of the classic examples people keep talking about is in many industrial estates, the land is given with a condition attached to it that in case of insolvency, the land will revert back to the government. There are also lands which are given for setting up industries by the government completely as freehold, but even many of those GOs in the past, in the 1960s and all, they have a condition attached to it that if the industry is no longer functioning there, the land can be taken back. Now, these are gray areas how you go about valuing. Some people take an extreme view on one side, it's zero, and some people take it that it is freehold. So this is one probable area where there is a significant gap which comes. Largely, I think, is an asymmetry in the way they interpret the data available or the limited data which is available, because one of the key constraints is also that data is not available in many cases to the extent. I would request others also to throw their thoughts on this?
Differences between valuables and many different things, right? One of the things that the scope of work of marketing very clearly laid out by the RP, right? The personal space in the scope of work is not enabled in a way that is not limited enough to devices and assumptions. To a certain extent that we can assume different advantages. So that is stemming from, I think, the effect in the scope of work itself. The other would be that they are, they're assuming they're working on different levels of input. So I think there could be one value could be working on a level 1 input, and the other is working on a level 3 input. So if there is a missed data from the perspective of a value, was missed out, let's say a comparable, which is nearly identical, or let's say requires less judgment because there is a similar asset in place somewhere. And I think you missed the point. So there could be a picking up of wrong input data on the basis of which he makes evaluation, right? The third would be that there could be a level 3 input, which means that they're basically working on extrapolating certain forecasts. They're basically working on assumptions and forecasts, which are, which can have very wide probabilities, right? So there are management actions to be taken by the resolution applicant. There are certain assumptions to be taken in terms of what the forecast, what the capacity utilization will be. So I think all of these disparities can lead to very different valuation. One of the other thing is the uncertainty. There must be some reconciliation now with the fact that there is going to be a difference between the transaction price and the valuation that actually that is based on certain probabilities of outcomes and certain assumptions, which may not be true when you may not be the two parties that are bidding may have different motivations, they may have different knowledge levels, which can lead to different transaction price as compared to a valuation. So I think it's a very, very wide subject, but I think at the point of and the valuation is done in a comparable way. The other distinction can take place between an RV and a set of RVs also. Suppose suppose a RP is giving work to 3 different RVs, right? And instead he's giving it to a RV, right? So they can be very different results of that, right? So these are all the grounds on the basis of which there can be a lot of differences between 2 valuers.
I think very aptly summed up by Anil and the speaker before. In our case, what we've realized is that most of these valuations that have come to us have come at a stage where the quotation says, this is the industry or this is the land parcel, please quote for it. So you basically quote at a time when you're not even aware of what exactly is the extent of the scope of work that you have. एक industry है, लखनऊ में है, उसका valuation करना है, and people are not even aware at how many such properties exist, because obviously there is a difficulty in obtaining information. Somebody whose factory is in the insolvency process is not as cooperative at times, and they're hostile. At times you're not allowed to inspect the premises. So you work on certain assumptions. Information comes in piecemeal. As and when the insolvency progresses, there is obviously more information available with the resolution professional, and at times you've been asked to revise the report, obviously without any extra fee. So the whole idea is that you must give a report on the date of insolvency, whereas the transaction has to place maybe 2 years down the line, 180 days down the line, and so on and so forth. So the very process needs to be, I think, streamlined. I think there is a law and therefore everybody acts according to the law, but I think we are only discussing how that has performed over the last so many years and what is the way forward. One, suggestion at least on the way forward is that when the information comes to both the valuers, there must be some information. The fact that you have to appoint compulsorily a valuer within a specified period of time, I don't think so is working very, very bright. So you must have the RP get to some level of information before even he's put out the valuation to be, before he approaches various valuers. I think that's point number one. Point number two is that yes, valuation is never a perfect number. And therefore, if two valuers are supposed to give the same number, then I think it's an automated process which doesn't happen in valuation. So there will be a variance in valuer A and valuer B. The question is how much variance is acceptable. And I think there must be some kind of a standard where if let's say I've quoted a value X, then is 10% variance a good thing or 5 or 15? In insolvency processes, the perceptions could be very different for very different valuers. And therefore, as the industry, which says that if you are in insolvency process and the industrial body has to take back the land, and therefore there is a lease written like that, the valuation is 0. Unless obviously you obtain a letter from that authority that for a payment of unearned increase or otherwise, they will consider, in this case, transfer to somebody. Now that can be something that I can assume that will exist. And at times I will assume that will not exist because that's a matter of going back to the agency, coordinating with it, and then coming back to the table. Have permissions expired? In land and buildings, often what we see is that valuers take into consideration the land value and give a value. However, many permissions, like environment permissions, permissions for building, etc., have expired. Now there's a process to renew those permissions, and that has a cost. Sometimes that omission is there. So I think over a period of time, this whole exercise needs to be done in a transparent manner where there is a data room. All the information that RP kind of finds must be part of a data room. And that information then, if known very transparently to people, then I think the evaluations would be very, very simple. So there is a need to, I think, also educate the RPs on valuations, because sometimes what I keep hearing is for everything that went wrong with things, and the valuers should be blamed. आपने जो price बताई थी उसमें transaction नहीं हुआ. Now, in a resolution process, there could be many other things that could, so much water will flow, and so on and so forth. So I think essentially, what I'm trying to say is there has to be an acceptance that valuations will differ. I think it must be decided how much variance is acceptable, and that I think is one. Two, if you have the data and you place it before the valuer, and then ask him to quote or then ask him to submit a revised report or whatever, sometimes what happens, मेरा ये है, मुझे valuation report तो सबसे पहले चाहिए, because you're trying to sort of benchmark your transaction against a valuation, information है नहीं. So that is the kind of environment that is prevailing. And lastly, I hate to say this, but quality in our profession has zero premium, zero. I mean, if I am a valuer who has done quality work versus another guy who just has passed an exam, and there is just nobody who appreciates that. Number kya hai ji? So unless we kind of appreciate the quality work from a work, I mean, I've seen 2-page reports versus 20-page reports, and RP ko matlab hi nahi hai. So you have to also start attaching premium to quality. So long we exist with this L1 quote, and we do not have any quality consideration of the valuer, his past qualification, his experience, and you say, आप भी उस गेट से आए भी सब बराबर है मेरे लिए, then you will have this variance. Thank you.
Sunil rightly said, चाय में जितनी चीनी डालोगे उतनी मीठी होगी, but ज़्यादा मीठी करोगे तो diabetes भी हो सकती है. So one needs to balance all of that. So
yeah, correct.
I think I'll leave it to that. But I'll just take it forward from there. There is concept about now joint auditors getting appointed and all that stuff. 2 auditors do this thing. So and like Justice Dave rightly he put it, furniture banane ke liye first you get good wood, then a good artisan, which is us, right? And thirdly is the quality control, which is the RVO or IBBI to come in, right? So is there merit in exploring? And I'm just leaving it as a thought. Should there be joint valuers who get the same bit of information and they issue out a joint report, which leaves out much, you will be going in for consistency in the evaluation methodology, that the valuers will discuss, agree. Yes, there is a possibility of match fixing. I won't get into that. But is there merit in evaluation of such a thing? And I'll put this question to Mukulita ji.
I think you rightly pointed out a good solution. I was also thinking of the same, because one valuer, just Mr. Agrawalji told that he's a seasoned and senior person. Naturally, he will have a number of considerations and he will adopt number of best practices in this field. While the others, who is a fresher or pass out, he is not that experienced. So certainly, he will be lacking in those practices to be adopted, or he will think about it. I may delay the process. And there will be variance because of these matters only, because of best practice of certain considerations, because everything cannot be written down in the standards. In the context, you have to adopt best practices. And those difference may be because of that, and difference may be because of the information having some value. One value might be having one information, others might not be having. So if there is a joint, concept, joint values to be appointed together, so they can have a joint report, and the other person who is a fresher or pass out, he may also learn from the senior, because he is working with that fellow. And I think it will be a good and healthy practice also. It will save the time, it will save the expense also, and there will be no need of appointing third valuer, which will further consume time, which is the essence of the whole process. So if the joint values are there, I think it will solve the problem and may eliminate number of malpractices or misuses or whatever is lacking in that report, because both the persons will formulate and will come to a consensus and conclusion.
Can I just take this? I think there was a very beautiful incident related to this. Can I just request the gentleman over there on the corner table to just kindly take the conversation outside if that's so important? Thank you so much. Einstein was approached by a very beautiful looking lady, and she said, let's marry, because the kids that are going to be produced are going to be extremely beautiful. They're going to be extremely intelligent. But, Einstein being what he was, he said, but madam, if the opposite happens. So my only fear is that, match fixing, yes, possibility that you may have two values or both inexperienced, therefore you result in a value which is extremely in variance to the reality, is also a possibility. So two valuers, it's a standard good practice. आपको अगर quality assess करना है assignment देने से पहले, तो आप एक what QCBS में आपका quality भी assess करो, उसका code भी assess करो, and then award it to one guy then. But trying to have a joint valuation, I think valuation is art and science. Science part you can collaborate, but the art part will be very difficult to collaborate. I'll give you an example. I won't name, but there was an incident where a property had come to us and the objective evaluation was not defined. The property valuation that we gave was sold on a scrap value 5 to 6 crores, sold on as is whereas in the working condition 11 crores, do a little bit of addition and make the property work better, 30 crores, scrap the whole building down, make a different, reuse it for a mall or for some other use, 75 crores. So the fact is, in insolvency, when we consider, एक land आई है, पड़ी हुई है, किस assumption पे आप value करोगे? So these are all challenges which I think need a little more debate at the beginning, rather than appointing the valuer in a hurry and then trying to work your way through and then resulting in these problems. That's my point of view.
May I just... I think the concept of joint, valuers, I don't think practically it will work, because there is always going to be a possibility of a judgment difference, right, between the two valuers. So I think one may take an opinion about an asset which is quite different from the other. So I think that reconciliation is not really, going to be easy between the two valuers. But I think the system of peer review is a better one. I think what we must do is, and I think RVOs have been doing it, that there is a percentage of reports which are selectively going for, for peer review, which is being shared between, with the valuers in a learning program. So I think if that can be the process, that process can be deepened, and they can be select, there can be some peer reviewers who are more experienced in that asset valuation. They can conduct the review of, let's say, select reports, and they can be paid for it. And that I think is, possible. Or in the case where there is a third valuer appointed, the third valuer can act like a reviewer. I think that is a, a better way, I think, forward.
I think that situation, you are right. I think I also agree. But point is that when we are having formal standards, earlier before the registered valuation and valuers rules, there was no no uniform standard to adopted by the valuers. But when we have standards, suppose there is a fever to a person and a diagnostic हुआ है कि उसको dengue हुआ है. So there is a medicine. Maybe a corona, there is a medicine. So doctors will prescribe medicine maybe containing the same formula with a different trade name of that medicine. But they will prescribe the same or any operation also. So when having a standard for valuation, then in that case, both the valuers need to adopt the standard. Best practice might differ, certainly, and the reconciliation will be for the best practices. Otherwise, standards will be same. And more, I think they will go deep into this profession. Maybe they will also evolve their best practice and formalize it also, which will be followed by every valuer. So anyways, practically, because I'm not a valuer, so I don't insist on that, because you all people are doing valuations, certainly your practical input is more important, and it's not possible. So I think at present the position is correct, 2 valuers and then the third valuer, fine. So I think no need of any reform in this area, that 2 valuers they are to be appointed, and which is there at present.
I just want to make a point here that, see, the structure of the rules, that itself provides for a discussion between the 3 different asset valuers, right? So if there is a valuer who's working even as an individual, not as an RV, right? In RV, there would be a consensus built between the 3 valuers who are doing valuation, right? So they will look at the asset in perhaps the same way, right? Whereas in the case of individual valuers, they can be this thing. But if there is a, there is a in the structure itself, it says that, he can appoint 2 other valuers for the inputs into valuation, and he can record it in the valuation report. So I think that it itself implies that he's supposed to take some sort of a, opinion from the other valuers in terms of the asset as such, whether the assumptions around and the premises being assumed in the valuation are correct or not.
I think very well put, Anil. There have been many cases where properties have been put into auction, and there's a valuation at which they have not sold. And then there is a peer review or a review that has been conducted. It has been done by government through many departments, railways, etc., where certain amount of assumptions have been brought to correction. So there's no second valuation done, but it is a peer review, and those values have got adjusted, and things have got better. So thanks.
Thank you. It was a very healthy debate, but let me just put certain facts in front of you. Okay, I think when I'm talked about 2 valuers, joint valuation, I was saying a joint valuation report can be issued out by them, with a condition that if they tend to disagree, they can still issue out separate reports. And a classical example of this right now is, if you take a look at any stock exchange mergers of large corporations, you invariably have a single report issued by 2 valuers for fair value and swap. So it is working. Okay, it's a good debate which we've had, and I leave it open. So it's evolution, right? We can't fix everything in one go over here. So let's, I think, move forward from here. Another question, which comes up, and that is a fantastic, some data was thrown up in the previous one, which is, they said actual realization has been more than the liquidation value. But another point which is worth considering is liquidation valuation, and we know a lot of us were there when the law was framed, right? The liquidation valuation was supposed to act as a benchmark or a threshold for dissenting creditors. It was never meant to act as an indicator for a price. That was the fair value. I think a good measurement criteria also is what has been the realization against the fair value? We don't talk about it, that data at all. The recovery against that. I think it's worth pondering somewhere. Perhaps we'll take it up separately with the IBBI somewhere on that. But my question again on this, which is coming up, is, you know, one of the biggest challenges we as practitioners face is, you know, RP has a protection under the Act when a RV is doing any valuation. One is getting a professional insurance indemnity itself is a challenge. The liabilities are much more onto him than this thing vis-a-vis. The risk-reward ratio is of a different kinds. I think that's something again on which we should discuss. And with that, I will just ask Balu sir first, and then Sunil, and then Anil, and then Madam can give her views on it.
Yeah, actually, there is right point. There is no risk-reward link in terms of indemnity, which is currently available, like it's available for RPs in the Act. There is no protection which is available for RVs. There has to be some mechanism which needs to evolve. Other well-established professions have created their own mechanism of doing it by limiting it in the agreements, etc. So something needs to be looked at there. Currently, one way which we could look at is limited by way of the acceptance agreements. But again, as the engagements are coming under the IBC, we'll have to see how much it will have old water also. It's to be tested.
I think this is a topic which is a very hot potato in the room. I think we've been discussing this, that indemnity by a valuer is a concept that has to be understood more properly. Indemnity डॉक्टर नहीं देता, कोई आर्किटेक्ट नहीं देता, नो प्रोफेशन, कोई केस ऐसा नहीं होता कि लॉयर जाके लड़े कि साहब मैं जीत के ही आऊँगा या आप जेल नहीं जाओगे. This is the kind of, but valuer, when he has to value, he is subject to this indemnity as if all the ills are with the valuer. तो मेरा उसमें एक बहुत अच्छा सजेशन है हर बैंकर को, हर आरबी को, कि मेरी रिपोर्ट एक एटीएम मशीन में एआई के साथ डाल दो और उसके अंदर जो है ट्रांजैक्शन हो जाना चाहिए. एज अ वैल्यूअर, एज अ बैंकर, एज अ फाइनेंशियल इंस्टीट्यूशन, अगर मेरी रिपोर्ट पे ही आपको ट्रांजैक्शन करना है तो आपकी ज़रूरत क्या है? पूरे रेजोल्यूशन प्रोसेस में एक वैल्यूअर की रिपोर्ट को आप डाल दो, उस नंबर पे ट्रांजैक्शन होना चाहिए. Then all this tamasha of a RV or anybody else and hundreds of thousands of consultants in the game have no meaning. So this itself is a joke that, you know, a valuer has to be pulled up for the value that he's done if it doesn't transact at the same price because data purana ho jata hai, sab kuch jata hai, aapki value kharab hai. You know, every banker will rub his sins in the name of valuer. Every RV will, every authority in this country has got this habit of rubbing their sins in the name of the valuer. Now this culture has to go, that's one. Two, taking a professional indemnity is expensive with the kind of, you know, but yes, you will be taking these, but you know, for a fee of 5, 10, 20, 30,000 rupees or maybe a lakh of rupees or a couple of lakhs, you are valuing assets of, you know, 1,000 crores, 800 crores, 2,000 crores. Can you give an indemnity? Can somebody write that kind of indemnity insurance? So I think in most of the professions, the law was that it will be applicable to the extent of your fee. And again, it has to be proven that my intent was malified. Here we begin with the assumption because value match nahi kari, he was malified. हम ये मानते हैं कि हम valuers सब चोर हैं, हम value गलत ही लिखते हैं for ulterior motives, and you put him into a कटघरा without even investigation. And you do not understand how valuation works. So I think community at large has to understand how valuation works. So there's a need to educate the larger community on valuation and then subsequently bring in this. I'm happy to see people who do this malified, you know, valuations go to jail. I'm very happy. But the fact is, let's first understand valuation as a profession. Has really that been understood? So I think this indemnity and liquidation value also has to be understood. Liquidation under use, जैसे पटेल साहब बोलते हैं, या liquidation कि आप काट के मशीन को किलो के भाव बेच दो, or a group of assets. So And one thing that, again, it is very important to bring out here is, you have these 5-6 things that are mentioned more relevant to plant and machinery valuation rather than land and buildings and other assets. So sometimes I get this कि मुझे ये 6 value चाहिए आपसे. So मतलब I have to explain to him that in a real estate case, it is not possible to break this, let's say, hotel and sell some things and piecemeal and group of assets. It's a whole asset which has to be sold. So learnings have happened. I think we need to mature as a system and then evolve ourselves to understand valuation much better than how we understand it today. कि अगर मेरी एक valuation report में number लिखा है, उससे उस पे transaction नहीं हुआ, तो वो report गलत थी. That is not how I think valuation as a profession should be treated and judged.
Sunil, I think I think we're running short on time also for the next panel, but I think certain good things which have come up, and I'll just summarize it. I'm cognizant that 6 o'clock we also got to wind up and there's another panel. Which has happened is, I think FCDC discussion around that is a very big positive step towards the valuation profession going forward. I think another important thing is that I think there are people who are talking about insurance being provided to valuers. Certain guys are reaching out. So I think it's a step which you may need to engage with certain people. But the important thing I think which is coming up is obviously people need to be made aware about the valuation in a big way, which is what a valuer is writing in the report that needs to be understood, whether it's not about caveats, disclaimers and limitations. I'm just saying what assumptions he is taking. I think educating the user of the report is a very important exercise for him to take either informed decisions or raise questions. I go to a doctor, if he tells me something, I always ask him, why are you saying this or what is that? So COC or RP has a right to question the valuer. He's appointing you as a profession. He's paying you a fee, so he has got a right to ask you a question. And that whatever assumptions you've done, that should be articulated in the report very well. So I think that is there. The second thing is about for the smooth functioning of the entire valuation. It is important that at the end of it, information provider is either the management or the RP. He puts in place some mechanism so that the information is being received by the valuer in the right time and he's able to do justice to what he's doing. I think these are certain very hygiene things which can result in the growth of the profession and lending more credibility to what is coming out from us. With this, I think I'd like to end. Ma'am, you would like to give some concluding remarks? That's, I think.
I think that now this valuation profession, as far as under the valuation rules is concerned, is 5 years. Now, in this age of specialization, certainly we have only 3 categories, but further subcategories and their specialization is very important to go forward. And for this specialization, we need to have a good, this is a discipline recognized and we have recognized valuation as a profession. Certainly, we need to have good courses in the universities also, where we can have valuation course. There are certain colleges and universities, I know in Gujarat also and other places, but I think professional courses we need to have professional colleges for this purpose, good lot of research so that we can match international standards also. And our valuers can be appointed because now, after couple of months also maybe, we'll be having cross-border insolvency. And in that context, our valuers should be well prepared, should know about the international standards so that valuers can be recognized, can be appointed by the professionals of other jurisdictions also, or the corporates of other jurisdictions also. So we need to have good study, research, professional courses and specialization. With these remarks, I conclude and I thank all the organizers for this session and for this holding this national conference.
For such an insightful session on the expectations and the way forward and the challenges and aspects faced by the valuers while undertaking valuation. I would now request, actually I do not know the name of many people, but those names I know, I would invite to give a plant sapling as a token of regard and respect to our speakers. Parag Kulkarni sir, if you can kindly come and we can start from the left side and then we can left of mine. Yeah. Mr. Ankit Goyal. Miss Leena. Sir. Please. यस सर को, हाँ लीना आप बालू सर को दे दीजिए. मिस्टर दर्पण गुप्ता. Thank you, sirs and madam, for such an insightful session. We'll definitely have more and more such kind of sessions so that our valuers are enlightened about what is expected of them and what are their powers also as far as duties are concerned. Thank you so much. We'll only in 2 minutes we'll have the second session panel discussion now. Thank you, sir. Thank you, ma'am.
We have to grow one more platform.
Got it. Yeah. We go ahead with the second panel discussion. We have with us panelists Shri Deepak Rao sir, who is the General Manager IBBI, Shri R.K. Patel sir, who is in IP as well as RV, Mr. Parag Kulkarni, who is in RV, Mr. Manish Srivastava, who is in RV, Mr. Tanuj Bhatnagar, who is in RV, and Mr. Sanjeev Pandey, former DGM, NCLT, SBI and Insolvency Consultant. Sir, I would like to also add on one more this introduction to you, that you gave registration to Triple IPI, which is the first agency IPA of this country, and I got it registered by your hands only. Yeah, welcome to you, all of you, sir. You may take the seats. We'll put the nameplates as. एक और चेयर ऐड कर देते सर. नहीं. Mr. Alok Kaushik. Actually, we have speakers from all the RVOs as well as valuers. So we are actually not aware, we do not recognize by face, so okay, there is a confusion. Welcome to Subramaniam Pachaiya sir also. Yeah. The panel discussion is on the expectation of stakeholders. The session would be chaired by Dr. S.K. Gupta, who is MD ICMI RVO. And also the panel discussion will be moderated by Shri R.K. Patel sir. Hand over to you, sir.
Thank you. Distinguished panelists with me, distinguished guests of the dais, ladies and gentlemen. We've been talking about valuation for the last almost about 2.5 hours now. And we are all valuation professionals. We know for sure what really valuation is all about. But let me tell you, valuations are temporary, values are forever. Valuations are temporary. They depend upon the timing when the particular asset is being valued. But the kind of valuation that all the stakeholders are looking for, they look for credible valuations, and that can arise only when you stand steadfast in terms of your integrity and values. Valuations are temporary, values are forever. The valuer's profession is a very challenging as well as exciting profession in the sense that from the stakeholder's perspective, you are expected to give a definite number setting out the value of a particular asset. But we know that valuation is only an estimate of the value, which is based upon certain assumptions, certain underlying premises, and it's also based upon certain disclaimers, caveats, and limitations. Normally, people believe, the stakeholders, that valuation is all about numbers. You look at the past data, you look at the current data, look at the forecasts of projections, and you have a model, financial modeling model, and you can work out valuation very, very easily. But that's not the reality. All the stakeholders need to understand that valuation is beyond numbers. It is not only about numbers. Numbers are, yes, the starting point, but not the end point. It is based upon judgment, lot of hunch, lot of gut feeling. Everything is there in terms of carrying out valuation. A simple process of applying a DCF approach, which all of you apply in various approaches and various contexts. The challenge lies in determination of an appropriate discount rate. Unless you are able to figure out an appropriate discount rate to be applied, your valuation is going to be way away from the mark and very different from what it should be like. Determination of COVID premium, consideration of COVID discount, all these factors pose huge challenge for the valuations. From the stakeholder's perspective, I think one single answer, be it banker, be it a IP, be it government, because government is going in for disinvestment. Look at the way Air India was valued, 12,000 crores. That became the bid price, and then the bids were called for, and finally Tatas were able to buy it at 18,000 crores. LIC, 2.3% stake government has diluted by fetching a net revenue of 21,000 crores. But look at the Zomato IPO. The company has current year loss of 2,600 crores. The company has current year turnover of 2,800 crores. The company has accumulated loss of 4,300 crores. In spite of such bleeding financials, the IPO of the company was oversubscribed 38 times. And the company was able to place its shares in the market at a price of 76 rupees per share, which went up to 140, 145. Then it came down to 30, 35. Now it is hovering around 60, 65, 70, whatever. The point is, the stakeholders must appreciate the circumstances, the premises, the background under which the valuation is carried out by the valuation professionals. Saying that we need one good number to enter into a transaction is simple enough. But look also at the challenges being faced by valuation professionals in working out that particular number. There are lots of uncertainties. But one way forward, of course, could be if all the valuation professionals apply consistent valuation standards and they follow the code of conduct to the hilt. Following the code of conduct means you have read all the 30 clauses of Schedule 1 because all of you have passed the examination. You need to understand them, you need to imbibe them, and then finally, you got to start living the code of conduct. You have to come to that state where you start living the code of conduct in real sense. That's where your report and credibility and stature in the marketplace is going to rise high, and all of you will be highly elevated to the profession by the different stakeholders. Not taking much of time, I hand over the mic to the coordinator of this session, moderator Mr. R.K. Patel, to take the session forward. Thank you.
Thank you, Chairman sir. And I think Chairman sir has rightly opened the session about the value and quoting the example of DCF, how the DCF can mislead the values and mislead the stakeholders. Sir, it is right that fair value concept is really a misconception among lot many people, not only in the valuers, but at the same time in the stakeholders as well. So stakeholders are different stakeholders, like creditors and then IPs and liquidators and then individual as well. Okay, so they have misconception definitely, because and even there is accounting standard as well, including valuation standards we do have, but fair value concept has been always misled. So I put question before the panelist that how fair value should be properly taken and in what sense, because Mr. Pichaya is there. He is, I think, thoroughly studied the valuation standards. Our IBBI people are there, chartered accountants are there, and IPs are also there. So I think this is the question I am posing, that expectation of the stakeholders will be the proper fair value. Now let us see how different stakeholders look at the fair value. Please, Mr. Pichaya. Yeah, okay. Anybody can start. Yeah, please. Okay, please. IBBI, sir.
I have a small presentation to make from our expectation side. That's what I told.
Oh, I see.
So maybe
Yeah.
My presentation would cover all.
Okay, that's fine.
Future is here, but unfortunately distributed unevenly in the society. The expectation of the stakeholders, like you said, the fairness of the fair value is under a test. What is the expectation of stakeholders? I see a framework to resolve this question, a framework of which why and how are two pillars with what in the middle. What are the expectation? Hows obviously respond to what's, which means in order to answer what are the expectation of stakeholders, first we understand, and obviously, we try to respond to them by asking how are we going to respond to these expectations. But our responses as a professional may go in vain if we don't connect ourselves to the why, to the deep roots, to the purpose of the profession. Why it is what it is more important than simply understanding what it is and how it is getting resolved. Organizations fail doesn't mean that the fairness was unfair to the stakeholders. Like sir said, fair value is in a context. Valuation report also mentions that it's a fair value as of a particular date. And fair value comes with different notions, market value, liquidation value, and likewise. Before going into the technicalities, I think I would like to hit one of the notions which I certainly believe that today as a professionals, valuers are vulnerable. Expectation of the stakeholders, sir. A professional RP calls and says that this is the value I want you to understand. A valuer is vulnerable. Client calls and says that I need you to sign valuation report yesterday. Valuers are vulnerable. But sir, I strongly believe that vulnerability of the valuer is not about winning or losing. It is about making himself available and showing him as and when the time of uncertainty requires him to show up with his guts, with his judgment, with his ability to secure a value, calling it to be a fair value. I'll take last 30 seconds in concluding remarks of my opening session. I would say that today the talent, people, technology, resources that are required to win future challenges are fundamentally different than what we have today. And we need to prepare for today as well as build for tomorrow. In other words, we need to exploit today, but also explore for tomorrow. And if we could do that, that's where we meet the expectation gap of the shareholders and stakeholders. Thank you.
Thank you. See, the stakeholders' expectation when you talk about, so since we are, most of us are talking about the IBC and the IBBI regulations, stakeholders' expectation is to maximize. So that's the IBC objective also. Whatever we have in hands, how to maximize that. Sanjeev Pandey is here. So I'm sure when the main stakeholders, the COC, when they take a haircut, so they must be feeling that pinch, that pain. So it's huge. Fair value is the value which an expert determines or estimate, is the expert valuer. Looking at the asset, when he sees the assets in the current condition, how far the asset has lived, what is the life of what was the supposed to be the life of the asset, what is the condition of the assets, whether it has been maintained, not maintained, whether the receivables have been, what is the trend of receivables over the past few years, how these are received, recovered. So all these things here, they take into consideration and they arrive at a fair value. So that's the value which is the actual value which the expert thinks lies there in that asset. And as far as the expectation is concerned, I think the stakeholders would like to maximize whatever they have, whatever they can recover from this.
Thank you. See, coming from a banking background and then having some experience in IBC, I have seen this valuation profession before it was regulated and then post-regulation. And my personal view, the regulation came too late. A lot of money went down the drain. I am a firm believer of the fact that one of the major reasons for this very gigantic NPA problem in banks was valuation. One option teacher told me once, when you sell an option or you give a loan, basically you are selling an option. What is an option? That the counterparty, who is your borrower, can default or not default. And his strike price depends on the value. Valuation is the strike price. It is as simple as that. While giving a loan, if the value of loan goes down below the value of asset, he will default. He has the option to strike. If it remains above the value of asset, his loan value goes below or goes above, it depends how he defaults or not defaults. A simple way he explained, and that is the fact of life. So the valuation profession is so important. It is one of the fundamental pillars of our trade market. I see 4-5 major pillars. One is, of course, valuation. One is your chartered accountant who gives audited accounts on which the entire banking lending structure stands. Then you have a system of public registry of charges and liens and mortgages, which is of course done by ROC and other agencies, now CRILEC. Then you should have some proper laws to enforce contracts, which Companies Act and now IBC, and then ultimately how to resolve disputes, enforce contracts, for which IBC has worked in some way. But ultimately, out of these 5 pillars, you are one of the most important pillars. But nobody understood this importance unless we reached the IBC stage and we saw this huge NPA problem, and then we reached the IBC stage where it boiled down to liquidation value. Then we realized that we need professional valuers. And then we started working on these regulations. So I think right now most of the valuers are looking at this problem just from the IBC angle, because most of you are registered under IBC or through regulated by IBBI. But as a user of the profession or user of the service, I can see as a whole, right from underwriting to administration to revival or rescue or to dissolution. So I use the valuation profession all across. And the most important point comes when I underwrite a loan. Then the valuation gives me a very good benchmark. It's not a good benchmark for dissolution or liquidation company, no. Because I have seen more than 300 liquidation cases under my control. And I think 90% of the cases we don't get liquidation value. Whatever value you guys assign, we don't get that value. That is a fact I have seen practically, handling 300 liquidation cases. So what exactly we expect as bankers or as lenders maybe? Of course, high level of ethics. I have seen just one of the gentlemen, he was sharing with someone that people tell that I want this valuation. So that should be, you should have the guts to say no. I don't do my job like this. I am not professionally competent to, you don't tell me the valuation. I will decide the valuation. That is the first expectation as a lender I have from this profession. You should have the guts and the audacity to say no to your client, whatever big maybe SB or anyone, no sir, I don't do work like this. You give me a job, give me a scope of my job, and I will give you valuation to the best of my ability and competence. But you don't tell me what number I have to write. Same problem I have seen in many of the CRP cases, where the RPs are hiring valuers, telling them, boss, if you can give me this value, I'll hire you as a valuation. So these are some of the ethical issues I think we should take control. If you really want to take the profession to higher levels, first thing you should know how to say no. Second thing is high level of competency. See, respect can be earned, cannot be demanded. So some of the previous sessions I was watching panelists saying we are not given respect and we are not respected. So nobody can command respect. You have to earn it, deserve it. For that, you have to show your premium, your quality, your competence. So there again, I say you enhance your level of professionalism, your level of quality of your reports, automatically the value will come. And now since we have seen that RPs, as compared to chartered accountants, company secretaries and cost accountants, I think RPs today, they are getting much better respect because they are a regulated profession and they demand good fees. And I think I can take that credit that in most of the lenders, there is always a ceiling on the fees paid to the professionals. For a valuer, they have a ceiling. For a lawyer, ultimately bank won't pay more than this. Similarly, cost accountant, anyone. But this is for the first time, because in SBI, I insisted that no ceiling. If you really want good talent in this profession, good people to survive, you have to pay market rates. Let it be a competitive, market oriented. And ultimately that has prevailed in the market, and I think people getting good fees. Even recently we suggested from SBI only that there should be some minimum fees so that this cutthroat competition should not be there. People were offering to operate as RP for fees of 25-30,000 are not done. So we recommended, I think IBBI was kind enough to appreciate that suggestion. And now there is a minimum fee. So something like this, I think RBO should also take up. There should be some minimum benchmark, because if you want to take the profession, you want to have that respect. First of all, you command that respect by way of saying no first, second commanding a decent fees, and then putting in quality. And I think it is immaterial that 2 people do it or 3 people do it. Ultimately, I think the kind of the country we have, the size of economy we are, becoming number 4 or 5 economy in the world, I don't think there will be like jack of all kind of valuers. You will need specialization. Right now, I think there's 2-3 kind of specialization, but you need further specialization. Like even in machinery, a textile machinery valuer should not be able to do a steel industry valuation. They should be separate. I have seen like investment bankers come across them. They have much better knowledge about the subject than any of you valuers, but they deal in only in one industry. Like a shipping investment banker I saw, and he was having right from the 0 to Z all entire knowledge about the industry. That is the kind of specialization you will require when you go for good quality valuation. So you will have to find your niche where you stand. Then you have to be mindful of the going on in the market, because as Mr. Gupta said, valuation is not something static. You give valuation report today and nobody should expect that it will remain static. So first of all, whatever disclaimer you give an expiry date to your valuation. That is my suggestion. I don't know your law allows or not, but there should be a 6-month or 1 year expiry date. Today I am giving this valuation. This is valid for 6 months. I am not sure after 6 months this will work or not. So that will save you from a lot of embarrassment, because after 3 years bank will come, boss, you gave me 1,000 rupees and now I am getting 200. No, I already said it is valid for 6 months. And we have seen practically during Corona that the valuation went down from here to here. And again after Corona was again come up here. So those kind of variation do perform in the market. Earlier, I think 10 years back, nobody thought that property values goes down. Today, in the entire world, people seen property values going down. First time in maybe 50 years. So you should imbibe that market information, market knowledge. You should be in touch with the real players in the market. And then finally, I would say that ultimately your valuation is tested against the price discovery, what we do during the process. Like you give a valuation when the actual plan comes or the liquidation recovery comes, then we test it against your value. But ultimately, nobody goes into their area who has tested that market. Okay, where is that market? Ultimately, you have given some estimate, but unless it is tested in a proper market, so there is no market as such. Today, what's happening is you give a value by your fair assessment, and ultimately the RP goes to the market. He doesn't very aggressively market the proposal. He gets only one resolution plan. And then this resolution applicant, through some sources, he get to know the liquidation value. And he puts maybe 100 rupees or 1000 rupees above the liquidation value, he is putting a plan. And that I have seen in many cases, maybe more than 100 cases. Somehow the single resolution applicant get to know the value and then he is putting slightly above that value. Ultimately, there is no price, no market was created. So unless you have 5 or 10 resolution applicants or maybe 10 bidders for an asset under liquidation, you will never get that value, real value or fair value which you are talking here. That is only possible when you have a real fair marketplace. And that market will be created by aggressive marketing or reaching out to people who have that product, demand for that product. Then only I think fair assessment of your valuation should be happening. And of course, all other things like ethics and speed, that is given. So thank you.
So please, Mr. Piche.
Thank you, Mr. Patel. I think the topic for the session is expectation of stakeholders. I think this is a very relevant and important topic because unless the stakeholders' interests are met, it's not that you can keep them happy. All the stakeholders cannot be kept happy. You cannot keep anyone happy all the time. If you are going to keep the stakeholder happy, the valuer is going to be unhappy. See, that is the situation. So, in this context, I would like to talk about the 3 statutes in the evolution of the valuation profession. One is the Land Acquisition Act 1894, Land Acquisition Act, where the collectors were doing the valuation, district collectors were doing the valuation for the lands acquired for public purposes by the government. That was the first start of the valuation profession in India. The second one, to say a kind of significant development, was the Estate Duty Act in 1953. There, the registered valuers are identified as estate duty authorities, equal to that of government officers. I mean, gazetted officers. The report should be signed by, in green ink, equivalent to a gazetted office. That was the stature given to the valuers in 1953 under the Estate Duty Act. And the third development is Section 34AB, which is more popularly known by all valuers, under the Wealth Tax Act 1957. Consider these 3 acts. In the first act, land acquisition, the stakeholders were unlimited because lands were acquired from all kinds of people, from all the states, from all the villages. So the stakeholders were high. And coming to estate duty, the stakeholders were limited. And coming to wealth tax, it is a little more than estate duty. And the problem was lack of understanding of the stakeholders' interests led to the scrapping of Estate Duty Act and abolition of wealth tax. But the Land Acquisition Act has been revised, many times refined, and after 6 or 7 years, it has come into existence. That has very robust provisions with regard to valuation. So we need to understand these 2 acts, which did not consider the stakeholders' interest, could not survive. Whereas the Land Acquisition Act survived, and that had a very reasonable valuation process built in the system itself. So stakeholders' interest, the topic today, is very, very relevant. If you, now you have what you call, under various sections, under the various statutes, about 6 or 7 statutes, where registered values are required to do the valuations. Now we have large number of sections, large number of purposes, fair value, market value, liquidation value, orderly liquidation, and so on. So we are in a situation where we have so much of opportunities opened up suddenly. That's the ecosystem. So unless the stakeholders' interests are carefully nurtured, it's not necessary to keep them happy. every statute is formed with an objective. So focus on the objective. If the stakeholders' interests are to be protected, yes. I think the valuation plays a very crucial role in this. And I was happy that the previous speaker was talking about the valuers, how they should behave with a banker. He said, a valuer should have the guts to say that I won't do it. But the system, the IBBI guidelines, which has been framed in 2011, has not been followed by any of the bankers across the board. But the bankers want us to do the valuation. I think the system, the employer who employs you as or empanels you as a panel valuer, the system should have the guts to say that no banker should dictate terms to the valuer. It should not be the other way around. See, it's after all, an employer can ask you to do this. That is natural. How can you expect? A guideline should be strictly issued that the bankers should be warned, or there should be strict provisions that in case a banker insists on a specific value, stringent action must be taken against them. I think that is absolutely required. See, this is what is actually ailing the bank valuations. I think all of us most of us do the valuations for mortgage lending. The 2011 guidelines are left untouched. They have a format. They want us to fill up the format. Now people have started realizing after the IBBI guidelines that caveats, limitations, and disclaimers has to be provided in the reports. So when we do evaluation to the bank, we started doing that. There was resistance from the banker. But the guidelines strictly says that disclaimers, disclosures, caveats, limitations, and reported assumptions which have an impact on the value should be disclosed in the report. But the bankers don't agree. If I give a report, they will not say, it's only the format, you cannot write more than a single word more than that. They don't accept. So I think this change has to come from the employer. I'm not trying to find fault. This is the reality. And most valuers have suffered depanel, facing inquiry. This is the situation. The valuers are not wantonly getting into problems. So the system is so complex that we have no other option left in certain circumstances. I just want to, just with the lighter vein, and State Bank of India, I think you are associated with that. I was speaking to some of the senior officers last week in Pondicherry. See, these people have slowly started accepting these disclaimers, and some of the banks have also accepted. Okay, that is another paper for them. So that manager was telling, see, we have a report in which the valuation report is just 3 pages. The disclaimers and other things come to 5 pages. But even though it is funny, we realize that at least people have started accepting that valuers can give disclaimers, disclosures, and limitations, caveats, and so on. I think what I personally feel is that there are two sides, and you can't, the other man can afford to be the wrong. So he said, valuers should have the guts to say no. So he can very well say that. And he can be wrong. But a valuer cannot be wrong. So I think we need to get into a stage, we need to sensitize the stakeholders and ensure that our professional competence are efficiently used by them. Thank you. Thank you for that.
It was a nice discussion, and as Mr. Parag concluded that the fair value is the value which valuer can justify, okay, to any stakeholder. And bankers, of course, it's been a very hot subject everywhere. As you said, it's very clear now from the discussions that RVs are governed by certain kinds of misconduct. And if I do something wrong in the valuation with the bank, I think my RVO is not going to leave me, okay? and anybody can complain to IBBI because that is also one of the conditions of empanelment with the banks and financial institutions. So, but when I am governed by those code of conduct and all these things, still banks are insisting indemnity bonds from the valuers. Of course, they can insist from other valuers. Why these valuers who are governed and they are now gaining respect? I think I have one more questions on that. That why these valuers having so much importance for their value, and it is going to be the benchmark for the governments also now for deciding their incentives and their income, IBBI's income. So in that case, why RVOs should not be treated at par with other professionals, cost accountants, chartered accountants, and company secretaries and lawyers? I think that time has come that we should announce. I think IBBI can help us to say that our RVs are at par with any professionals you take in the world. I think this is the need of the day.
Let's hear the IBBI viewpoint here. I would request Shri Deepak Rao to make his brief presentation.
Yeah, and for that, for him, while making his presentation, I have some questions for IBBI. How IBBI foresees the future of valuation profession, role of RVOs in IBC, and what are the expectations of IBBI from RVO and RVOs, and how RBI is going to help in development of profession not only in our country but cross-border as well, as they are promoting cross-border insolvencies.
I think we are short of time, so I would run through my presentation. Whether it's visible? Yes. So 5 years of regulation of valuation profession, and I think it's not moving. Koi hai technical sides? Slides are not moving. So the questions which you have asked, please give me. I'll sum up this presentation and I'll reply all those questions. So expectations of stakeholder. The first session we had, and we had enough of discussions on who all is the stakeholder. Of course, corporate debtor, because he's the person who has caused who is basically cause for IBC, and then creditors. So I've got the skin in the game. In Hindi mein hum usko kehte hain gardan fasi hui hai jiski. Then resolution applicants, who is looking forward to grab something. Resolution professional, who is the link between past and future. Workers and employees, as Justice Dave said, and maybe the family members of the workers and employees, if you see it from the social side, not from the economic side, and the entire market, because your valuation is determined by the market and your valuation determines the market. It's both demand and supply game. Now, what is the stake of IBB? Do we fit in the stakeholders category or not? Can we categorize ourselves as stakeholders or not? So there are two arguments. The responsibility of valuation under code is with valuers registered under the company's Registered Valuers and Valuation Rules 2017. And government has designated IBBI as an authority for development and regulation of the profession of valuers. That's why we can be called a stakeholder. Now coming to the objectives of IBC, I'll come back to that slide whether we are actually the stakeholder or not, or if we are the stakeholder, in which particular context we are the stakeholders. The insolvency and resolution, the IBC has certain core objectives. The first is time-bound resolution. The second is maximization of value. Third is promoting entrepreneurship. Fourth is balancing interest of all stakeholders. And fifth is establishing Insolvency and Bankruptcy Board of India. So when you see the fifth objective, the actual stake of IBBI is realized, because success of IBBI as a regulator would be measured on the basis of the core objectives of the code, to what extent we have achieved those objectives. So these core objectives are value maximization and time-bound resolution. And both the objectives are based on valuation. The first objective, that is value maximization, is directly dependent on valuation, and the second objective, time-bound resolution, is indirectly dependent on valuation. Now coming to valuation, valuation is a subjective assessment. The worth of the assets, there can be difference in valuation estimates of different valuers. कुछ कहते हैं आधा ग्लास भरा है, कुछ कहते हैं आधा ग्लास खाली है. But there can be people who can say, but there may be people who can say that technically the entire glass is full क्योंकि आधी हवा है और आधा पानी है उसमें. So valuation is a subjective assessment, but sometimes it challenges the sanctity of the valuation and raises doubts on the decisions based on such valuation. So the entire objective of the IBC, time-bound resolution and value maximization, gets defeated when you have wrong valuation or when you have valuation which creates further confusion, because it leads to appointment of third valuer and it causes delay in the process also. Now what IBC did, we have done a small study. The background of the study is we wanted to understand the methodology and reporting style of valuation. To comprehend the extent of valuation in the valuation estimations, then it was basically a knowledge gathering exercise rather than a fault finding mission. We didn't want to find any fault with the valuation process. We just wanted to understand how the valuation takes place. Then application of valuation standards, whether you really apply the valuation standards and how do you apply the valuation standards and how do you apply those approaches, market approach, cost approach and all. And then whether the rule 8.3 of the valuation rules is being complied to or not. So we had an approach. What we did, we selected 15 cases where third valuer was appointed. Now these are the 15 cases which pertain to the period when we did not define the significant difference between two valuations. Now we have 25% of the significant difference. These 15 cases belong to the era when we didn't have a proper definition. So out of these 15 cases, 7 cases each were from plant and machinery and securities and financial assets, and 1 was from the land and building category. The variation worked out between the highest and the lowest value in terms of percent. If the lowest value was 100 and the highest value was 200, there was a 100% variation. So it was done both for fair value and liquidation value. So these were the results in terms of numbers. So these are the, see, what I would like to request all of you, this should not be seen as a general assumption on the valuation profession. These 15 cases would be the worst of 15 cases. These were not even selected on the random basis. There were no professional random selection or purposive selection. These 15 cases are those 15 cases for which we had information. So we selected those 15 cases and our observations are like that. There were 13 cases where the difference between the lowest and highest value was more than 100% in fair value. And there were 10 such cases in liquidation value. The difference between lowest and highest valuation was more than 100%. In fair value, there were around 3 cases in fact, where the difference was more than 1000%. There were 4 cases where the difference was more than 500%. In liquidation value, there were 2 such cases where the difference was more than 500%. So these are the numbers. I'm not going to generalize it because I haven't gone into the entire universe. These are the small sample, not even a purposive sampling or a random sampling. This is basically availability based sampling, but these guides something. These throws something. Although I myself is a student of statistics, but very often I read Mark Twain. He said there are lies, there are damn lies, and then there are statistics. So we didn't want to depend on statistics itself. That's why we went into the valuation report. The first exercise was based on numbers, and the second exercise, we have selected certain valuation reports. We have selected certain cases where third valuers were appointed. Among those 15 cases, we have tried to understand those valuation reports. What was the reason? What were the reasons for the deviations or huge deviations or variations in the valuation estimates submitted by different valuers? The first thing which we found, it was not something technical. There were deviations from Rule 8 of the valuation rules. Rule 8.3 says there are certain things which you need to record on the valuation report. Most of these valuers miss that also. That is something which don't expect. You're talking about expectations of the stakeholder. From the regulatory point of view, I'm telling you that is something which is unexpected. Some valuers did not even mention the standards they have used for valuation. This is the basic criteria. When you do something, you need to mention the standards. That is something which needs to be recorded on file. Reports did not contain certain basic information as well. Industry kahan par hai, kitne din se hai, uska background kya hai. At least these are the things which need to be recorded. In fact, some of the valuers, maybe 2 I think, they have even missed the date when they went to the site. There were no justification for assumptions. Trade receivables for one particular category, when people assume 40% of the book value, 20% of the book value, 60% of the book value, without giving any assumption or any justification. There were missing items. For the same case, when the two valuers did the evaluation, the first report had certain items and the second report missed them. So that is something which RP should have also taken into account. Inventory is something which is, which complicates or further creates confusion for all of us. One plant and machinery valuer did valuation of inventory in a particular case, and then in another case, SFA valuer did. There was one particular case when SFA valuer said, ki RP told me not to evaluate inventory, and in second case, the SFA valuer did the valuation of inventory also. So these were the major observations which we found, and then there was arbitrariness and abruptness. There was no flow. Most of these decisions, there was a plant and machinery valuation report which I was going through and I discussed it with, I think, either Mr. Gupta or Mr. Goel. वहाँ एक मंदिर बन रहा था, तो उसने प्लांट एंड मशीनरी की वैल्यूएशन में मंदिर को भी इंक्लूड किया और उसमें कैपिटल वर्क्स इन प्रोग्रेस लगाया उसमें. See, I'm a religious man, but at least I don't subscribe to such view. Now, coming to the slide of expectations of a regulator, what do we expect from you? We are a stakeholder in capacity of a regulator. Valuation is not just numbers, something beyond them. एक और एक हमेशा दो नहीं होता, sometimes it's three also. So there is something called synergy valuation. You have to justify your numbers. Somebody asked me कि IBBI के हिसाब में fair value क्या है? Being a regulator, we are least bothered about the number. We are the regulator for the process of an economic law. We are concerned about process, not the number. So we always expect a valuer to record the justification of his number. The way things are changing, past is not much of a guide for future. I'm born and brought up in a small town in a tribal belt of Madhya Pradesh. For us, people used to say agli pidi. Agli pidi means baap, baap ke paas beta, or bete ke paas beta. Now my daughter, who is 11-year-old, she studies in DPS. She tells me, Papa, आपका पुराने generation का mobile है, नया आ गया है. So now I realize कि पीढ़ी means जब mobile बदलता है तो generation बदल जाती है. तो our valuers need to understand the market, the dynamics of market. बाजार और बाजार के आयाम. It's easier said than done, but they need to understand that. Otherwise, it would be difficult for them to survive in the market. Had Kodak understood it, it would have been in the market. There are a lot of companies which were doing well, but they are no longer in the market. Perhaps they missed this dimension. Strength of the profession also lies in its professionalism. There may be professions which can claim that we have numbers across the country, we have got rank and file across the country, but ultimately the strength lies in its professionalism. Perhaps that is the reason there are certain professions like chartered accountant, cost accountant, company secretaryship and all, they have regulated themselves. They still command respect. So अगर आप खुद को regulate करते हो, that is always better than somebody else regulating you. Ethical standards are equally important. Valuation standards can be international valuation standards, it can be Indian valuation standards, it can be African valuation standards. Professional standards are something which are prescribed by somebody else for you, and ethical standards you prescribe for yourself. Deviation from the line without proper reasoning can be misleading. We have seen valuation reports where people have given one-line valuation report that the fair value would be 20% of the book value and the liquidation value would be 80% of the fair value. I'll just sum up in a minute or two. Every assessment requires a justification and exceptions require more. So if you are giving zero value, you have to justify it in a more elaborate way. And then understanding market and its changing dimension is must for any valuer. That's what we expect from you. Morning when I prepared this presentation, I woke up at 5:30 something and I used the word capacity building is as important as any other management. But later on when I came to office, I changed it. I said, there is enough of a capacity in the valuation fraternity. When you listen to people like Rajan Vadhavan or Balu sir or Mr. Agrawal, you realize they are best of the speakers on this field. So there is enough capacity. The only thing is that you have to manage the knowledge. You have to pass it on to those who don't have, because life is a relay race. It's not a 100-meter sprint. And this is the punchline for all of us, all the professions. I have a special liking for a teacher who could elaborate everything. I have a special liking for a doctor who talks to me to discuss my diabetes. I have a special liking for an engineer who explains the numbers like anything. So if you can't explain simply, you don't understand it enough. It's equally important for professionals, for valuers, and for bureaucrats also. Thank you.
Thank you so much, sir, for this elaborative thing. I would like to... Sir, he wants us to vacate, actually. We have to Yeah. We would like to extend this session, Deepak Rao sir, if you agree, on 1st of November from 3 to 5 online. If you agree, we'll issue the notice to the valuers for this expectation of the regulators from the profession of valuers.
First of November, I will be.
Sir, any date you tell us, we'll be ready to host it.
I'll be going to Vipassana for my 10-day program, and I will be back by 6.
Online, sir. Whenever you'll come back.
Vipassana, I can't even talk to my family.
Whenever you come back, you just let us know. We'll coordinate with you, and then we'll have this session.
It will be my pleasure to discuss this issue. Number 4.
The
second one. I've already
Yeah.
had a 3-day.
I would request Suman madam to present plant sapling. I'm sorry, I have to just conclude it because the organizer is standing here. He wants us to vacate this hall. So just, yeah, there is another event at 7 o'clock here. They have to clean up and, yeah, sorry for. No. Please do not leave. We have a high tea here. Join us for the high tea in this lobby, please. We can have discussions. We can have discussions in the lobby, please. Yeah.
Sarika madam here on the dais, Parag here. I think let me take opportunity to congratulate all three registered valuer organizations for building this capacity building seminar, and also congratulate you for taking lead, and Goel sir as well. So thank you so much on behalf of everyone. Thank you.
Sir, दे दीजिए. Just start. Just start. फटाफट हाँ. हाई टी के साथ. दूसरे लोगों को मत बुलाइए. इनसे ही खत्म कर. सर कर दिया मैंने. Yes sir. Manish Kumar sir, please don't. No sir. Sir, he is only the bridge between organizing this event. Sir, please come on the desk. Just join us, sir. Please. Yes. Please join us, sir. Done it.
मतलब you are absolutely right. जो कहते हैं ना वो नहीं वो एक motivation जिसे
Exactly, sir.
Manish was the man behind it.
Exactly, sir.
ये देखे बहुत
लाइट के कहाँ जाएंगे चलो पैक करवा के देखें
Sir, packing, please.
नहीं ये दोनों बाहर से आ रहे हैं
Manish sir, I would also like to join hands to. Yes, sir.
डॉक्टर साहब
Thank you, sir.
నేను మీకు కాల్ చేస్తాను మొబైల్ లోని
सर सर को दिया यहाँ पे सर का पियोरिक आदन का पेन
हेलो सर सारा मंच